Hi, what's up, guys? Hi, Derek. Hi, Benz. How are you doing?
Hello. Awesome.
Yeah, awesome. Very cool. Hey, hey, guys, everyone. Welcome to another episode of Hobby Research Weekly Market Chat. And today we are happy to have Derek here. Derek is from the other department, and let's introduce Derek first because our audience already know us very well, me and also Benz. So the floor is yours, Derek. Please go ahead.
Yeah, hey guys.
Yeah.
Thank you, Johnny. Yeah, thank you guys for having me. This is Derek, and
Mm.
I work at Huobi with the title of Senior Operations Manager. And a quick history. Before I also worked as a listing manager at another cryptocurrency exchange. So it is definitely a pleasure to join you guys, and a very glad that we can talk about crypto payment and share our opinions. So this is super exciting to me. Um,
Yeah,
yes,
thanks,
thank
Derek.
you.
Thanks.
Yeah.
So today we have a special guest. We have Derek here, and we are going to explore something about crypto payment because in the last year we have seen increased institutional adoption across products. For example, we have seen some crypto payment emerging for convenience and for the goods of the users. And for example, crypto.com have their crypto card, and then right now we have Binance going ahead and developing the I think that's Apple Pay function with their Binance card. I think yeah, something like that. And then today we are going to discuss all sorts of things about crypto payment with Derek. We're going through what crypto payment is, and then probably we can discuss the benefits of using it, and also there are some concerns when it comes to security and also the adoption of crypto payment, whether it will be very uh, will be a problem to tracking liquidity and also money laundering, all that kind of thing. We can talk about it with Derek. So before that, I would like to invite Benz to update the market last week because we had an important news coming out last week. That's the CPI result. And yeah, Benz, would you like to talk us through the CPI results and yeah, how's market looking right now? Thanks, Benz.
Yeah, thanks a lot, Johnny.
Yeah,
So it's a quick recap of last week's November CPI result. So
yeah,
it came out, I think, around last Tuesday. So core CPI year on year came in around 6%. So it beating expectation of 6.1%. And it's better than previous result, October's result of 6.3%. And CPI year on year. So this is including other prices like food and gas, stuff like that, came in 7.1%, also better than expected of 7.3% and previous 7.7%. Uh, so this CPI data is no more the market, the Fed has been closely monitoring this because it's part of their monetary policy to keep inflation down. So for the past, I think two readings, October and November, CPI data has been, on the better side. So we should be seeing some lower numbers coming better than expectation. So this is one of the reason why this time the Feds decided to hike rates of 50 basis point instead of 75 basis point, which was priced in like maybe two months ago. Because if I remember correctly, 2 months ago, the chances, I mean, the probability of a 75 basis point hike is around 60%. So yeah, in I think in the short term, the market is, I mean, the market is pretty bullish because CPI, I mean the Fed fund rate is lower than expected.
yeah,
But however, um, the recent FOMC meeting, there's a lot of bearish statements coming out from the Fed's Jerome Powell and other I would say chair as well. So because they were saying like I think they have been fanning this expectation for a very long time, saying like, okay, inflation is gonna be sticky for some time. They're gonna keep interest rate at a high level for a longer period of time than expected. So this is actually is no news to us because they have been talking about it for I think at least 1 2 months ago. So so interest rate predictions or projections by the Feds actually came in higher and longer than previous projected based on the latest FOMC meeting. So for first year's projection is around 5.1%, which is like the terminal rate that we're looking at. So it's like 1 year from now, the interest rate will be 5.1% against 4.6% compared to previous. So second year is 4.1% compared to 3.9% based on previous projection, as well as third year as well, which is higher. So this is one of the reasons why the market for the past last week, the last 3 days of the week, the market has been trying to digest these bearish projections. Hence, even though the rate hike was better expected, meaning that 50 basis point hike compared to 75 basis point hike, the market is still trending downwards, or the market did take the news positively. So currently, let us take a look at the current yield curve. So the current US yield curve is not the previous, yeah. The current US yield curve is actually more inverted than uh 1 month ago. So the green color line is 1 month ago. So actually it's more inverted right now. So it in a way it sort of signals that there is a higher chance of a recession in the near term, maybe 1 to 2 years. But no, there is no hard rule that once the yield curve inverted, the market will fall into the recession within 1 year or 10 months. There's no hard rule, but this is based on historical uh, I'll say based on history. Yeah. So, and with regards to the next FOMC meeting, which is 1st of February, which is 42 days from now, the market, there are more increasing market participants expecting a 25 basis point hike, which is 71.6% versus 50% of a 50 basis point hike a month ago.
Yeah,
So you
I think
see that,
that's still
yeah,
tentative because let's see the Christmas sales and also other data and see
yes.
if these probabilities will change in the future.
Yes, so
Yeah,
so the market is like sort of like very positive,
yeah, that's
thinking
good.
that the Feds won't actually increase 50 basis point, but uh, as I think we talked about it like previously, like okay, labor market is pretty strong. Really strong means there are more workers out there earning money, right? And how inflation is elevated in a way because there's a higher expendable income from the consumers and there's limited goods out there in the economy. So people are actually chasing after limited goods with more money. Hence, there's inflation. So, and if job markets continue to be strong in the US, uh, that it's not a prediction, but I think that the inflation will continue to remain at a higher or elevated level for maybe a few more months, maybe 3 to 6 more months. Yeah.
Okay, thank you, Pence. Yeah,
Okay.
very
So
cool.
next, I think this is
Yeah,
something that I've been thinking about it for some time. Which I mean, you guys can add in if you think there's something logically wrong. So
yeah,
the question is like, is the Feds kicking the can down the road? It's like they're pushing the problem for later to deal with it for later time. So you see, the current CPI data shows like huge increase compared to a year ago from the top right graph, if you see.
yeah,
So
yeah.
because our CPI data is compared to a year ago, so it's like November this year is compared to last year, which is like a 6.1% for core and
Mm,
7.1% for non-core CPI. So currently you see like since June 2022, the CPI index has been, I mean, has been slowing down, or we call a plateau for a period of time. After that, there's a slight increase. So what I mean, like, kicking a can down the road is, what if, next year, June, right, the CPI actually in, increased a little only compared to now. And if you look back 1 year ago, actually there's only maybe a 3 to 4%, or maybe even 2% increase in CPI, right?
Yeah.
However, the Feds have not solved the problem of the excess liquidity that they have pumped, or the excess money they have pumped into the economy
Mm. Yeah.
in January 2020, which is the COVID time, start of
Yes.
COVID. The loose monetary
Yes.
policy is, as you look at the left graph, bottom left graph, which is the Fed's balance sheet. The Fed's balance sheet has ballooned so much since 2020, and the increase in interest rate is supposed to actually rectify this problem to reduce the balance sheet, right? Likewise, for
Yeah.
the red graph, which is the US M2 supply graph, it counts like the sort of the liquidity in the market as well. So since January, there's like maybe a 50% increase in M2 supply out there. But no, the increased interest rate did not actually rectify or actually reduce this balance sheet and M2 supply by a large percentage.
Mm.
So so
Yeah.
if 1 year down the road or half a year down the road, inflation is back to normal, right? And the Feds can just continue to just start to print money again, without rectifying the amount of money they printed, or the excess liquidity that's remained in the market. And this actually inflation is still there. It's just that compared to 1 year ago, it's only a small amount.
Yeah.
If you understand what I mean.
Yeah, I agree with what you said, and that's a good reminder for us since I think it's not yet done. The Fed is not has not yet done with the inflation thing, and by lowering the increase of rate hikes, that doesn't mean it's pausing. And if it's pausing, then it's another phrase, but we're still in the first phrase. So yeah, everything's still tentative thing. We're gonna see how they gonna do in the next FOMC meeting. I think it's in February. But in crypto, and what we think about is uh, we want to see more adoption going on, and also for the liquidity side, we want more market participant. But given that the macro economy is still looking bearish, and probably we still have some time to go, and it will be a little bit difficult. But in my opinion, it doesn't mean that the actual utilization of blockchain is being halted at the moment due to this bearish economic environment. And I think if we ask Derek, I think Derek has a better sense in the business market as well, because I think Derek has been researching into a lot into crypto payment, and then probably the industry is still there because everybody's building in the bear trend in the bear market. And yeah, maybe we can introduce Derek to maybe share with us his opinions towards blockchain utilization, and also the ongoing crypto payment adoption in Web3, right?
Yeah, sure. So I totally agree with you guys. That the market is not looking at its best. But through the bearish market, we have been through this in the past, and every time after a period of bearish market, the new projects will just they will rush out in their sector, because they focus on building instead of getting all those messy, let's say, marketing information into their head. As for the crypto payment, I would say, even if in this under this bearish market, we can still see I'm sorry, we can still see a lot of projects working on forwarding this whole sector. And we can probably start this conversation by digging into what is crypto payment. And basically, when we talk about crypto payment, in comparison to traditional payment, it's about paying with your crypto asset, like we say Bitcoin. And for now, there are several ways for us to do it, and the most common way is through a cryptocurrency to fiat currency journey. So in that way, it will require a third-party payment institution to exchange the cryptocurrency into fiat currency through deposit and withdrawal, and then make the payment. So that we can make sure that the merchant actually receive fiat currency. And this way, the most common solution is through issuing a crypto card. And actually, several crypto centralized exchanges they have cooperated with Visa or MasterCard to issue their crypto cards to do so. And we are and we will get deeper into this about how we can forward this whole sector.
Yeah, thank you, Derek. And I have actually some questions to raise, and probably we can just go through these things. So I'm thinking about whether the crypto payment for the merchants will be settled in fiat currency, or is it a good thing that they just accept it as crypto and in the end term, and then they will not convert to fiat? And would that be a good thing, or the trend now is still based on crypto to fiat conversion? Yeah.
Yeah. So it really depends. So let's
Yeah.
say if you are talking in a crypto native community where all those companies they hold crypto asset, and the end users they hold the trade and they invest in crypto asset as well. So in that case, the merchants they have no problem accepting um crypto asset and because they invest in crypto asset as well, and they pay in crypto asset for sure. But let's say if you are talking about some merchants we meet in daily life, let's say Starbucks, when you go to buy some clothing, and for those traditional companies, they understand the idea of crypto maybe, but it would be a lot of work for them to do from a financial perspective if they have to keep that asset under their account. So for them, we would say in the foreseeable future, it will still be a very, very hard concept for them to accept accept the cryptocurrency from their from their customers. So that's where Visa and a MasterCard and all those traditional payment giants can jump in. They can help you do the conversion through cryptocurrency to fiat currency to make sure that again, like we mentioned, the merchants can accept fiat currency as settlement, which from my perspective is far from enough. But this is the best solution we can look at for now at this stage. So this is also one of the benefits we can or one of the disadvantages we are seeing right now in payment in crypto payment industry, and there are a lot of ways we can improve this situation. For example, Visa has done this project recently about promoting the settlement through stable coin, let's say USDT, USDC. And that way it will so for most merchants it's very hard for them to accept Bitcoin because of the price and the value goes up and down. But when it comes to USDT or USDC, it becomes more stable. So we would say this whole process well, it deserves some respect. We have to respect the whole process before we can see, okay, the merchants we meet in daily life, they're okay with accepting crypto asset.
Yeah, thank you, Derek. So actually, I want to add something to your point. In 2020 and 2021, when crypto was so famous back then. Everybody is talking about crypto, and then I went by a supermarket, and then the supermarket also accepted Bitcoin and also Ethereum for settling the purchases. And but now, recently I went by the supermarket again, and then the terminal for settlement just removed crypto in it. And I think this phenomenon is because crypto is still in an early age, and there is no fixed rule and also trend and also a structure for these merchants to adopt crypto payment. Maybe they are still searching for the best solution, whether to hire a third party crypto payment gateway like Visa and Mastercard, or they're gonna do it themselves. And it's also a problem that Derek mentioned is uh, they can if they settle it with cryptocurrency but not fiat currency, and then they have a problem of facing the volatility. And for merchants, this is one of the biggest issues because if their income is impacted by the fiat currency or no, I mean the values volatility, and that will not be a good thing for also for their accounting is not good as well. And yeah, so it's also but it's also good to see that some merchants have been approaching to use crypto payment gateway. And for your information, um, in Hong Kong, we are still not seeing a lot of merchants crypto adoption. We are only seeing individual merchants accepting Bitcoin for that's P2P, right? And then we still have not seen a lot of development in B2C and also B2B, that kind of thing. So maybe Derek, can you add? Maybe can you also give us a maybe an introduction about the current B2B or B2C crypto payment development? Is there any difference? Maybe I think B2C is a little bit underway, right?
Yeah. So let's start with the situation you mentioned about that a period of time ago when you go to the supermarket, they accept cryptocurrency and now they canceled it.
Yeah,
I would say on this regard, there's a huge difference between the merchant. They take this as a marketing campaign, and that they take cryptocurrency as a daily channel for them for their settlement.
I
Because
see.
when Bitcoin just firstly came out, everybody wants to talk about it, and guys want to talk
Mm,
about it just to be cool, and merchants want to talk about it because they want to attract the attention. Oh, we are so much up to the trend. So back in that case, they didn't actually take that seriously from my personal perspective. And it is actually a good sign now that more and more merchants they take Bitcoin not as a marketing campaign to draw attention, but they are actually thinking very seriously about how to deal with the trend of cryptocurrency become more and more popular.
mm,
And as for the B2B and B2C transfer, or let's say P2P transfer, P2P transfer for sure, it has been really popular in the past. And as for the B2B transfer, this is actually one thing I'm so much interested in because usually when we talk about B2B transfer, it means it can be cross-border transfer, and usually with a huge amount, and the whole cash flow can be somehow complicated from several perspectives. And so if in the past they do the settlement through the traditional payment ways, they will face some really stubborn questions. For example, the handling fee are reasonably higher than reasonable. I'm sorry. And also, when it comes to cross-border transfer, it can really take a while and can be complicated. And these are the problems where crypto payment can jump in and to really solve these problems. by by paying on chain, the cross border situation just all of a sudden becomes of no hard situation, and also the handling fee when of transfers of huge amounts can go reasonably lower. So yeah, just so B2B and the cross-border transfers is actually one of the benefits that crypto payment can bring in general.
Okay, thank you, Derek. Actually, I'm wondering because a lot of people, when it comes to crypto payment, they tend to think that the other side of the receivable party will receive crypto as the end product, right? But as Visa and also Mastercard appear, and then I'm starting to think, will they centralize the transaction uh, by hiring maybe a crypto exchange to settle the payment with them, or maybe they will do it themselves. Actually, what kind of cooperation will exist between merchants and Visa and also exchange? I'm a little bit interested in diving and finding out the relationship between the three. And maybe Derek, can you give us a brief explanation about this?
Yeah, sure. So to make sure the merchant accept fiat currency for the settlement, um, what they so let's say the most common solution for crypto payment so far is through issuing crypto cards. So let's say in this case, if a card issuer works with Visa, let's say to issue a crypto card, and another character would jump in, which is called the bank sponsor. I don't want this to look complicated, but in a nutshell, the bank sponsor is the one with all those qualifications in the specific area to issue a card. And what some issuers would do is they would work with the bank sponsor as a third party institution who provide the ability to exchange cryptocurrency to fiat currency. So let's say me as an end user, I have my crypto asset in my account. And at the same time, I applied for this crypto card. When I go to a merchant and I want to purchase some goods or some service, and through the payment journey, what I would do is I swipe my card, and in my account, the crypto asset would go down with the accurate amount of the price I just of the price I need to pay. And the being sponsor, the third party institution we just mentioned, would at the back end exchange this crypto asset into fiat money, and then transfer this fiat money to the merchant. So in a nutshell, this so-called being sponsor is most of the time the one who provides the ability to exchange cryptocurrency to fiat currency instead of Visa. And Visa is more of a card scheme who planned on the whole thing or run the whole thing from a bigger picture.
I see. Thanks, Derek. I think from maybe in Ben's point of view, I think Ben will be very keen on using the crypto card because yeah, you just hold your asset in crypto, right, Ben? And then would it be a good thing for you if crypto card becomes very prominent in your place where everybody and also merchants, businesses, restaurants, everyone uses it? Would it be a good thing to you?
Personally, I think for crypto users like me who live in Singapore, we don't really have we have very limited changes to actually trade in, and also to uh, deposit or withdraw cryptos to fiat. So I think if there's a crypto card, I mean that there's one that we use for crypto.com. But if there's a card for from a more reputable exchange, right? I think it will be more, I would say, will be better for people like me because I have a lot of assets in crypto, and I find converting to fiat uh, a bit of a hassle sometimes because there's sometimes the fees are high because it
Yeah,
goes through a third party or the banks takes a big cut from the exchange rate.
yeah.
So I'm not sure. Maybe I can ask Derek like what's the difference in fees? Is it like much cheaper or maybe 10 or 20% or maybe even 50% cheaper if I were to, call from a crypto, maybe BDC or maybe even USDT. From USDT, I would like to change to Singapore dollars. Yeah, right. How much savings will I get?
Um, just to make super clear of the question, Ben, are you asking what is the fee rate look like when you convert your fiat currency into cryptocurrency through a crypto card, or
From a cryptocurrency to fiat
yeah, from cryptocurrency to fiat through a crypto card, or
through a crypto card. And if I were to do it for through a crypto card, and do an and convert compared to converting through the traditional way, the normal way, how much savings will I actually save?
how much savings you would actually save.
Yeah.
I think he
I
means the discount rate because usually when we do P2P transaction, for example, let's say in Hong Kong, I want to sell some of my Bitcoin for some Hong Kong dollars, and then there will be a discount offered by that person because the demand is not very prominent here, and just discrepancies in prices happen across different real life exchanges, and yeah, and maybe he's also referring to the admin fee and also everything lump sum, the
Yes.
administration fee, everything included, and then would that be a big problem if we just put so much effort and also the effort needs money, right? And then the product will be cost saving worthy, or maybe just redundant worthy, maybe. Yeah,
So the whole fee rate will really depends on which product we're talking about.
yeah,
And also it would differ from region to region.
yeah,
I'm not super familiar with the area of Hong Kong. And also the situation you mentioned about discount. But in most areas or under most cases, when you convert through a crypto card, the fee rate would look very reasonable. And usually when you swipe your card, and the convert journey will happen automatically, without any annual operation from the end user. So from your perspective, you are not actually paying anything for this conversion. I hope this answers your
mm,
question. Or
yeah, definitely. And it
Yeah.
also depends on region. Yeah, that's true because in some cases maybe crypto is not very popular and prominent, and then people just a lot of people don't actually really know crypto, and therefore the demand also supply is low, and then discrepancies might be very big there. But to
Yeah.
add to the point, to add to the point of the benefits of using crypto payment, for example, crypto card, from a per consumer perspective, I'm also a trader, and then I feel it would be very convenient to just spend my savings in crypto. That would be a good thing. I just don't think the discrepancies will be very big in the future because I think it will be arbitraged, and also having some giant meta corporations like Visa and Mastercard coming into enhancing the gateway system, and I'm actually quite optimistic towards the adoption. Although in Hong Kong we don't have strict regulation, monitoring, and also regulating settling payment in crypto. I also want to share some interesting stories I had. So back in 2019 and 2020, not many people traded crypto at that time. And if you trade crypto, you're gonna do some bank transfer, and the transaction might look suspicious to banks. And back then, it was a problem actually because of the prevalence of virtual banks, and also a lot of money laundering. Money laundering cases were related to the use of these virtual banks, and also unknown transactions there. And then I remember when I purchased a few K, a few K worth of Bitcoin back then. And then the bank I used just contacted me for, for investigation, and they even wanted to freeze the account, because in Hong Kong back then, in 1 2 years and 3 years ago, they hit it very hard in terms of, the money laundering, monitoring. They are very strict to this. And um, but right now, I'm a little bit reassured, as we are seeing more and more, the big techs coming in, the giants coming in. I think they have better communication with government, and also with central banks and retail banks, and that will eventually make things more convenient. And yeah, that's just a funny story. But right now, I think it's better, as exchanges and institutions have started their way to do more transactions. I think the crypto payment transactions are no longer very suspicious to the banks. They already figured it out. Yeah, this one interesting story. So yeah, we can actually go on and talk about the product features of crypto card. And let's imagine if from a consumer perspective, if you are using the crypto card, and then these are actually the elements that you will use, and these elements are actually the elements of the crypto card product. I think everybody will have their own account, and also do KYC, and also there will be transaction records, and and also we can actually trace the transaction, and also analyze spending activities, and all sorts of things. And then one thing that I find it a little bit confusing is for the KYC verification, because we still have not we still don't have a very clear and strict guideline for doing the KYC in terms of crypto payment. And actually, Derek, can you give us maybe a brief introduction to whether KYC will be very important in the future if we want to sign up for a crypto card? Is that
Yeah.
actually yeah?
Yeah, sure.
Yeah.
So if you want to apply for a crypto card, you have to first have your account at let's say no matter if the card issuer is cryptocurrency exchange or any other crypto related institution, you have to first have your account there. And then for a crypto card, let's say it is firstly a card or a daily card, and for its first feature. So all those KYC journey you will go through is exactly the same with the journey you have applying for any other, let's say Visa card, a MasterCard card. But but you just have to go through two KYC journey. Technically, one is through, let's say the cryptocurrency exchange, and the other one is through applying the card. And for the journey you go through applying for the card, it is under a regulation of the card scheme. Let's say most of the time Visa and a MasterCard. There will not actually be much difference between applying for a crypto card or any other Visa card. But it will really just depend on the again, if you guys remember the bank sponsor we mentioned, and also the card issuer, if they have some special rules for this.
I see. And also, I'm wondering the relationship between CBDC from the government side, and also crypto payment, maybe cryptocurrencies from the crypto payment gateway side. And then will there be some confusion and maybe competition or confrontation in terms of this relationship, because as we know, governments tend to encourage people to adopt CBDC because they can actually have direct access, and also for security issue, maybe control in the blockchain and maybe in the transaction. And if I think there will be some, the picture is not very clear right now between the relationship of CBDC and also crypto in this kind of payment gateway. What do you think about this, Derek? Do you think CBDC will dominate the other, or maybe they will just take it as a rivalry, and let's see how things unfold? In your opinion, what will it look like in the future?
Yeah. So either we're talking about CBDC or any other government regulation under crypto industry or any other industry. I would say this really is about the balance between the commercial development and the legal regulation. I would not say one side is in any case supposed to dominate the other side. But this will just in general depend on how the whole regulation of on crypto industry go in the future. But for now, I don't see much threshold that is set by this kind of regulation for the crypto payment so far.
Yeah, and I also think that it's very interesting because some less developed countries tend to adopt cryptocurrency in a more optimistic way than when you compare to more developed countries and also cities. They tend to have more regulation, and I find it confusing because I suppose in more developed places, the new tech will be embraced with speed and also with encouragement, but it sounds kind of counterintuitive to me. So,
Yeah.
just a little wonder, what do you think about this, Derek?
Yeah. Well, this is actually one of the benefits that crypto payment can bring because the crypto payment can work as somehow as an addition for the traditional payment methods. Because in those areas where the economy are underdeveloped and also the financial system is not so developed yet, their legal currency may in some cases depreciates. So the locals they are more willing to use stable coins, let's say in their daily life. For example, in the regions of Latin America, one third of the nationals they use stable coins in their daily life. That's because they are more willing to hold the coin which is more stable. So in that case, that's why it will become more popular, even than those areas where the economy are more than developed. For those areas, yes, for sure, like you mentioned, they are more open to the new technologies and they're more willing to lead the whole industry by having their giants or building up some really cool products. But let's say cryptocurrency, end of the day, as a currency, it really depends on the user experience. So if the locals they are willing to accept it, because it's simply even the stable coin, the value is more stable than their local legal currency, which again in a lot of cases depreciates. So in that way, they're more willing to use it in daily life. But still, another point which is very important here is this will be used. This is for now used as an addition to the traditional payment. But with the use case becomes more and more, the regulation is supposed to go stronger, and this is actually a very very good sign for the development of cryptocurrency.
I see. Thanks, Derek. And I also remember, I think Ben shared a news with me before. The news was about the inflation in Argentina was so high that people could no longer use their own country fiat currency to purchase goods, and they had to use USDT stablecoin instead. And I think this is one of the examples that you might be referring to. And yeah, that's one thing that we are observing right now, and that's kind of interesting. Yeah. So
Yes.
actually, yeah. What is anything to add on, Ben?
Nothing much from it. It's really
Yeah.
interesting, like how I think crypto payments is like powering more developing nations.
Yeah.
So I think personally, I think that is the way to go. Judging by how US dollar is still the active currency of the world. So most developing countries definitely use US dollar or US dollar equivalent, which is stable coins like USDC for their payments.
I see. Yeah. That's cool. And I think we have gone through a lot of things about crypto card payment and also crypto payment gateway companies and the trends with Derek. And yeah, very cool to learn more about crypto payment. That's a cool thing. So the last session, I would actually want to share some of my recent findings about the liquidity in the market. And yeah, let me just take you through this chart first. It's really interesting because I've been dipping down into the Federal Reserve's liquidity on their balance sheet, and then after that, I found a interesting relationship between asset classes, especially crypto assets, Nasdaq, these risky assets with their balance sheet. Actually, I think I shared some of these findings before back in July and August, but some new findings here, and that's the 10-year yield, no, 6 months yield, 3 months yield, and also 2-year yield. The yield surging due to inflation and also the bad outlook of the economy, and that is inversely correlated to risky asset classes. And if you also look at the bank deposit here, that's what Benz was referring to in the first section. And yeah, in the 2020 boom, the cash flooded the risky assets market, and then yeah, and also we have the Fed fund rate, and also no, wait a minute. Yeah, and the liquidity here, the liquidity model inverted RP, we use this indicator in the past few episodes, evaluating the liquidity situation of the risky asset market. And right now, we tend to see that the liquidity is lying flat at the moment, and some risky assets pumped, for example, ETH and Nasdaq. And one of the explanation I think was because when the RLP was not absorbing or absorbing liquidity from the market, and then money would like to find somewhere else to stay, right? Maybe people chose to pump stocks and also crypto and other risky assets, and that might be one of the explanations. Yeah, and right now we are seeing actually a divergence here, which the model was showing in November. That's because of the FTX collapse. And if it was not the FTX collapse, and then I think crypto would be trading very close to Nasdaq. If you watch the green line, has been making higher low and also higher high. And yeah, that's some of the interesting findings, and I actually will share with you guys later on in my research papers. And later on, we're going to do a monthly research report, which will include some liquidity models and also Bitcoin models for you guys. And there is a very good one for your reference if you want to evaluate trend strength and also understand the current trend of the market. And I think that would be a perfect read for you guys. Yeah, and that's it. And also in the end, we have a prime vote coming on. So let me get to the news, and that's one of the new thing happening. Sorry here. Yes, and also to join the Prime Vote, I think you can vote for listing, right? And then it's actually a cool stuff. Yeah, Ben, you heard of this? You heard of this event, right? Crypto Prime Vote. No. Actually, the
Yeah,
procedures are here, and then yeah, you can just go to Huobi app, and then you can either go to this website, you go to the support hobby.com, and then you go to register for this one, or either you can do it inside the app. And
yeah.
yeah,
I think it's more like I think it's most importantly is to increase the use case of HT tokens.
yeah,
Rather than just using HT tokens as a form of trying to get a better tier to have lower exchange fees on Huobi. So in a way, users can stake HT tokens to actually get more votes to get their projects or the projects listed on Huobi. So in a way, they can get some potentially some of the newly launched project tokens and a chance to actually buy the project tokens at a low price. So this is some I think incentive for you to actually hold HT tokens, actually stake it. Like even if you stake HT tokens, you can get in the form of APR. I think APR is quite high for HT tokens as well. So I think it's a win-win situation for everybody as well. Yeah.
yeah. So make sure you check out this Prime Vote second round. They have like 30 projects out there for you to vote, and then yeah, go on and check it out. Some cool stuff there. So uh, and yeah, I think we have covered a lot of things today, and I want to thanks Derek for joining us today, and we had a nice conversation about crypto payment. Yeah, and also thanks Spence for hosting this market show with me. That's great.
Thanks, Johnny, and thanks, Derek, as well.
Yeah,
Yeah,
thank you guys. It's been an absolute pleasure, and thank you guys very much for having me.
yes. And do you have anything to add here, Derek, or any questions? If you know, and then
Yeah,
yeah.
yeah, good from my side.
Okay, okay. So I think that's the end of today's episode, and thank you guys for watching. And hopefully next week, I'll be able to share more interesting updates about the market. Probably can do some trend analysis next week. As what's Bitcoin trading now, Benz? I think it's 16K, right? 16K,
Yeah, yes,
800, something like that.
has
Yeah,
not been moving for quite some time.
yeah. The volatility is low, so yeah, maybe interesting to do a analysis next week. So see you
Yeah.
guys next week. Yeah,
Okay, see you. Bye
yeah.
bye.
Thank you
Thank you
guys.
there.
Thank you.